Hello, everybody. It is Monday, the 18th of May, and today is a good day in the markets. Things are up, so today is a good day to close out some trades. And I like to use LEAPS calls in my account, which gives me a little bit of leverage. So, as you can see here, this is a 117.21% gain in just a few months, which is phenomenal. So not only that, but I'm getting a little bit of expiration risk, which is coming in with these. These calls are great. You can make lots and lots of money with them, but they have to be managed properly because they do have an expiration date. And so if you're normally trading a portfolio of all stocks and bonds or ETFs where you're just long all the time, when you introduce options, you can introduce what's called expiration risk. So what I want to do is minimize my expiration risk, and essentially I'm going to take these gains that I've got today in this call that is starting to approach expiration. You can see some of my other calls are for March 2021, and this SPY is for January 21. So these have respectively 242 and 305 days left. So they're not anywhere near maturity or needing to be managed at this point. So I'm just going to close out this June 20th 150 call. What I'm going to do here, I'm looking at options, and I want to just look at options for the Qs. This is what, just to kind of simplify the screen here a little bit. And maybe I could also tack on there this June 19th. No, that's not the one I want. June 20th. Oh yeah, that should be it. Yep, just trying to get down to only one option position on the screen to make it a little easier to follow along. So what I'm going to do is close this guy out by selling another call, and I don't want to sell a call below 150 because this is my long call, which allows me to purchase this stock at 150. I want to sell a call that's above that so that I'm buying low and selling high. Now remember, I initially paid $3,589 for this call, and if I wanted to, I could just sell it and get back this open net gain of 4,217. But I'm going to do something a little bit different. I want to give it a little bit more time to still move in a good direction. So I'm going to look at, I'm going to go to the trading tab for the Qs, and I'm going to look at something that turns this into more of an in-the-money spread. So again, I don't want to consider any calls that are below 150. Now, for example, I paid about 3,500, so that means I can go all the way to 200, and I get back my initial investment, more or less, let's say 199, and I'm still going to make about 5,000 when the expiration comes, because I'll buy at 150 and I'll turn around and sell at about 200. So I'll make my 3,500 back right now, and then as long as the Qs, which is all the way up at or right now it's currently at 228, it just has to stay above 200 and I make the maximum on this trade. So I'm going to choose to get all my money back, and I'm going to sell one call, oh, these are September. Okay. We want June only, we don't want to look at September. This is why it's good to make sure you pay attention. So these won't be paying quite as much because there's a little less time value on them, but that's okay. So if I want to make all my money back, the initial 3,500, I can sell the 193, which totally makes sense to me. It's a shorter dated option. There's less money on. It's less valuable, and I want to make sure I only sell one because that's all I have. I don't want to sell covered calls for stock that I don't own, that I'm not long on. I want to hit the mid. I want to get all my cash back that I initially invested, I'm going to get back 3,579, and then I'm left with a spread that's worth $5,000 that I've essentially got for free. Now, the only trick is that this needs to stay above 193. As long as we finish out the next month with this stock above 193, then that means I will make the difference in the strike price between 193 and 150, which is going to be $4,300. So it's essentially a free spread worth that much money, and almost all the risk has been taken off because I've got back my initial investment, and now I have this spread out here. So it's like a free, more or less a free position for me. So let's see if the order has been filled. Yep, it's been filled. So I now have got all my money back and taken all the risk off of the table while still letting this trade perform. Still giving it some room to mature, and I didn't have to fully close it out. So that's how I manage my expiration risk, and I hope you guys enjoyed.